Today is edition of Back Roads of Illinois. We are bringing you lasted for farming sources and information sponsored by AgriGold. This is the Markets Club podcast. We're glad you're here. Today we have a conversation about the commodities markets, an ag outlook on this Friday with Greg McBride from Allendale Incorporated. Here's Greg McBride from Allendale Inc. We're here on the Markets Club podcast with Greg McBride from Allendale Incorporated. Hey Greg, how are you?
I'm doing very well, Caesar. How are you?
Very good. Let's discuss about the grains markets for today. What is your position on the corn markets?
Yeah, I think the corn market actually in the old crop still has a friendly spin to it with the good export demand, very good ethanol demand. Now there were a couple of weeks of lower production numbers for ethanol, but overall still has a good picture. We've probably hit the upside target around that 520 for the July contract. Overall, still has a positive message. Now, the concern we'll have in the corn market is similar to what we'll have in beans is it tariff related? That's going to be the big thing. And with new tariffs going in on Mexico and Canada as of April 2nd, that'll be something to watch to see how these markets react. We've already come off those highs now by about 20 cents, 25 cents. So have we done any major chart damage? Will be a big question.
Hmm. How is the fundamental on the May corn? Meanwhile, the March corn will be gone.
Yeah, we look good. I think with the March going off the board here in a couple of weeks, you've got first notice coming up on Friday. We've already seen the bulk of the movement in that from that March to the May, or even out to the July contract. So we're still sitting with the funds very long in corn. They can still stay with that even when we start to look at some of these new crop numbers. But overall, I think the old crop corn situation, specifically in the May, is still a good position to be looking at the long side of that market.
Greg, what is your take on the Ag Outlook Forum for this Friday?
Well, I think with the ag forum, obviously we're going to talk about the new crop balance sheets, and when you look at the corn side of things, everybody has been talking for a while that we're going to see an increase to corn acres. Maybe that's 3, maybe that's 4 million acres, get us up to 93, 94 million acres, or there's I've seen some numbers even go higher than that. But overall, I think with what you're looking at with trend line yields at 182 plus bushels per acre, it does lead you to look at new crop and say that the new crop corn probably puts you at about 2 billion in carryout. We won't know that. We won't get anything like that until May. But then when you look at the other side of it, you start to look at the beans. Beans are going to be tough to turn a profit this year, and they probably do warrant seeing a cut of 3 or even more million acres. That'll be what the USDA probably shows us is maybe about 83 and a half million acres on that. But it doesn't really necessarily change anything from your from the perspective of your ending stocks, new crop ending stocks with those acres and the trend line yield above 52 put us still at about 365 to 375 million bushels. So the big concern is still going to be demand when it comes to the soybeans. The corn side is better demand it has for the last couple of years, but the beans, it's all about that demand. And will China come back to it? Can we get some sort of a deal done? And that the USDA is not going to have any answers for that, so they're going to stick to the what we know and or what they think, which is all going to be about acres and how that affects the overall balance sheets.
What is your thoughts on the world supply and demand side?
Yeah, I think on the corn side of things, it is continuing to lighten up. That's a good sign for us. That should hold prices a little bit more firm. Doesn't necessarily mean that we're looking for higher prices off of that, but it will keep a little bit of premium built into the market. But the bean side of things, your ending stocks, even though they are down from last year, they're still at the highest level that we've seen in about 5 to 10 years. So this is this concern on the bean side of things with higher ending stocks and higher stocks use that we haven't seen for quite a while. It's still going to keep us under wraps. It's going to put some pressure into these markets and does give us a little bit of cause for concern because not only that, but we also have what looks like a record crop coming out of Brazil. We're talking right now about 165 to 170 million tons for South America's or for Brazil's crop.
Do you recommend for your producer about put a call?
I've been actively selling grains, and it's been all hedging at this point. Conversations revolving around the old crop and the new crop. It's talking specifically about either buying puts or selling futures, or even on the old crop making cash sales on these bounces. You are at a place of near profitability or profitable on the corn side of things. You're not profitable on soybeans, so it's hard to make those recommendations. But any of these bounces that we get on the beans, they do need to be sold because I can't give you a reason to see much higher prices than what we've got right now.
We will see for next couple weeks with China. Are you watching about the cattle markets with these cattle?
Yeah, cattle have been a kind of a wild ride here. It looked like it was, we were headed to the moon with the fat and feeder prices. A lot of that was a lot of the last part of this move was all about the border with Mexico being shut down because of the screwworm issues. Well, we finally opened that up. We've seen the markets back off a little bit. The fat cattle market has backed off enough to say that we've given a little bit of space. Doesn't mean we're done. We could still see a little bit deeper of a correction as those cattle continue to flow in. Same thing on the feeder side of things. Now you did see it get a couple of good day bounce here on the feeders, and that's even though we were down just a touch today, you're still within striking distance of those recent highs within $5. So that big steep $12 to $15 drop that we saw has already been cut at least half. So I would be a little bit cautious on positions right now with the cattle. Use the front months as your opportunities for hedging. In the deferred months, right now we're still looking at very strong production and bullish production numbers. So we'll continue to play in the front months. On the deferred contracts, you've got to be a little bit careful with those things taking off a little bit. But overall, cash has come down off the highs from a few weeks ago. You've also seen box beef numbers that have fallen off over the last couple of weeks as well since we opened that border.
How is the fundamental on the cattle markets for right now, Greg?
Right now, I think if you're looking in the short term, you've got to be on a little bit on the defensive. with the opening of the border with Mexico, with some of the concerns about these tariffs, whether it's cattle coming in or beef going out, or even just the stock market in general, with some of the concerns about the economy. This could be a situation where you could see this market fall back off in the short term, but it's not necessarily. I don't think that it has to be as deep of a cut as what we saw in September of 23, where it was roughly a $30 drop. So I think overall, fundamentally, we are still friendly on the cattle, but we're cautious at this
point. Do you have any final thoughts on the planting intention on March?
Yeah, I think everyone's kind of under the assumption that we're going to see a move of plus 3 million acres to corn, maybe taking away 3 or so million acres of beans. I'd be cautious to say that we have to see that 3 million come out of beans. I think if you look at history, we don't necessarily cut the bean acres nearly as much as we would add on to the corn. It's not a 1-for-1 type situation. So I wouldn't be surprised if we see a 3 to 4 million acre increase on corn, but only maybe a 1.5 million or 2 million acre cut to the soybeans, which can play with your overall ending stocks and make things maybe a little bit more bearish on the bean side with some additional acres that everybody kind of already had penciled in to be lower.
Follow up with the demand. Do you have any concerns about the demand for soybeans for China?
Absolutely, yes. The concern right now would be that they've never fulfilled the remainder of the phase 1 trade deal. You've got tariffs that are going in, that have already been in place. You've got additional tariffs that could come in for their part. So far, they've been very moderate. They're very mild as far as what they've put tariffs on. Some of it's machinery and whatnot, but they haven't done anything as far as soybeans or any of the other agricultural stuff like they did back in 2018 or 2019. So we'll continue to watch that as an issue. But the other side of it is, you also know that Brazil at this time normally is a big shipper of soybeans. They've got a fresh crop that's ready to go. They've got what looks like a record yield. Argentina has back to about 48 to 50 million tons on their own. So overall, we are more expensive per bushel, per ton than the South Americans, or specifically the Brazilians. So I am a little bit worried about the export demand. We've already seen 6 out of the last 7 weeks where we've missed the 5-year average. Last week we barely missed it, but 5 out of the 6 weeks before that we did miss it pretty badly.
Thanks, Greg.
Thank you, Caesar.
This is Greg McBride from Allendale Inc. on today's podcast. Thanks to Greg McBride from Allendale Incorporated, this has been the Markets Club podcast for today. I am Cesar Delgado. You have a good day.